Today, Bitcoin starts the first full week of 2026 in the green. Coinbase shares climb after Goldman Sachs turns bullish on the crypto exchange. And Yuval Rooz of Digital Asset discusses his outlook for crypto in the new year. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Cryptocurrencies on the rise to kick off the first full week of the year. As of noon Eastern, Bitcoin climbed more than 2.5% to the $93,000 level. Ethereum climbed about 1.5% and XRP rose nearly 5%. And today, the Grayscale Ethereum staking ETF became the first spot Ethereum ETP to distribute staking rewards to shareholders in the U.S. The crypto asset manager announced today that the Grayscale Ethereum staking ETF made a distribution to existing shareholders. The proceeds came from the sale of staking rewards earned by the fund between October 6th and December 31st, 2025. Now, as of market open, that represents more than $9.4 million in total staking rewards being distributed to investors. And taking a quick look at a crypto-focused stock, Coinbase shares are up nearly 7.5% today after Goldman Sachs upgraded the crypto stock from a neutral rating to a buy. The bank also lifted its 12-month price target to $303 per share from $294. The upgrade comes even after shares of Coinbase have slipped 13% over the past 12 months. Goldman analyst James Yarrow said that Coinbase's underperformance has opened up an attractive entry point for investors. He also applauded Coinbase's strong business fundamentals. Okay, let's talk about the top stories. Fundstrat's Tom Lee joined CNBC's Squawk Box this morning to share his 2026 outlook. He also discussed his price target for Bitcoin in the new year, saying that it could hit $250,000 in 2026, and explained why.
In 2026, if Bitcoin gets to 200 or 250,000, it would be breaking the 4-year cycle. So that's sort of part of our view is that this, if you follow the 4-year cycle, Bitcoin should be down this year. But I think that there's tailwinds that are building. And part of it is we kind of reset leverage on October 10th with that big shock.
Right.
And now I think there is still institutional adoption taking place, and Wall Street is still building a lot of products on the blockchain. And then we have U.S. government support. So I think these are tailwinds that help Bitcoin recover this year.
Next, Ilya Lichtenstein, the hacker of crypto exchange Bitfinex, credits President Trump for his early prison release. He said on X Friday that he had been released from prison thanks to the president's First Step Act. This was a criminal justice bill signed during Trump's first term, aimed to reduce the federal prison population through a risk and needs assessment system. Now, on Friday, the Trump administration told CNBC that Lichtenstein, quote, has served significant time on his sentence and is currently on home confinement consistent with statute and Bureau of Prisons policies. Lichtenstein was handed a 5-year sentence in November 2024 after pleading guilty to charges tied to the hack and theft of nearly 120,000 Bitcoin from Bitfinex. Last, an e-commerce company's data leak revealed customer information of some users of the crypto hardware wallet Ledger. Now, Ledger told CNBC its e-commerce partner, Global E, experienced an incident that affected Ledger customers using Global E as a merchant of record. Both companies assured no payment information was accessed in the incident. A spokesperson for Global E says that leaked information includes name and contact information, that the company is working on notifying all potentially affected individuals. All right, for our main story, I spoke with Yuval Rooz, the CEO and co-founder of Digital Asset, about his outlook for crypto in 2026. He also discusses the recent news that his company and the Depository Trust and Clearing Corporation, or DTCC, teamed up to tokenize the clearinghouse's custodied assets on the Canton Network. So let's start with markets. We're a few days into 2026, and crypto is moving higher, especially after the U.S. action in Venezuela. Why are we seeing these moves in response to the arrest of Maduro, and how do you think this plays out in the short and medium term?
Yeah, so I think that end of last year, there have been quite a lot of concerns about just general market conditions. I wouldn't say just crypto. And I think we're seeing that markets are calming down, and there's still, I would say that compared to where we were a year ago, quite a lot of excitement about this space. So I'm just saying that now, after the end of the year, people are excited to get back in, and we're seeing and going to continue seeing it for the short to medium term. And if the industry continues to deliver on what it's set to do, then I think we're going to see that continue throughout the year.
And then, of course, we saw the crypto run-up begin this weekend in tandem with the U.S. takeover of Venezuela. So talk to me about that dynamic.
Yeah, I mean, I think that, again, what we're seeing still in crypto is that it's a risk-on asset, and we see it react more intensely to any type of micro event. And I think now that markets have calmed down after everything that happened over the weekend, we're seeing again markets are up and crypto is reacting, like a risk-on asset compared to other assets.
But this is the exact opposite effect that we saw when there were the Iran strikes last June. We actually saw crypto prices come down, and some people have attributed that to the fact that there might be a limited oil supply, might be inflationary pressure, and this is the exact opposite effect. Do you see that playing out, or is that not resonating with your read of the markets?
It doesn't resonate. I think that there are other market structure dynamics that are happening within crypto that are unique to crypto. But I think broader picture is that crypto is still a risk-on asset that, generally speaking, reacts to market conditions.
And this is a lot of jargon, right? When you say risk on, it's an easy thing to throw out there. What does that mean in real terms? Break that down conversationally.
When we see markets sell off, I think we're going to see crypto sell off even harder. And when we see broader markets rebound, we will see crypto rebound even harder. And that to me is really just how crypto as an asset still behaves.
Now, there's speculation around Venezuela's crypto holdings and what it could mean for the market or for the U.S.'s own reserves. Does that have any impact on the market if these funds are out there and they've already been a hodl play?
To be honest, I don't have any knowledge of that. I think that a lot of times people come up with all kinds of theories around, the price of Bitcoin. I just, generally speaking, find that it's much more realistic that crypto moves with market trends still, and that these type of speculative assumptions, in my opinion, do not really move the market as much as it did. Because again, it's not just Bitcoin that moved, Ripple moved, or XRP moved, Ethereum moved, and other asset classes have moved. It's not just about Bitcoin.
What are the big catalysts for crypto this year? We could point to concrete factors last year, like the approach to regulation in the U.S. changing and the Trump factor. The market has had a whole year to digest that. So what's the focus now?
So I think that past the Genius Act and market structure being in play, I think it's all about institutional adoption. I think that's why I'm very positive about Bitcoin and other crypto. I think we're seeing institutional adoption only increasing every month. And therefore, I think the biggest take for crypto in 2026 is institutional adoption. And I think one of the major aspects that people are talking about is being able to solve for privacy on crypto rails, which in my opinion will accelerate institutional adoption even more.
Let's also talk about DTCC and the firm's partnership with the Canton Network. The clearing giant will be using Canton for its tokenization plans. Talk to me about what this means for Canton and how you'll be involved.
Yeah, I think that is, again, if we think about the previous question, I think this is massive for the industry. So the DTCC manages over $100 trillion worth of assets. The whole crypto industry have been looking, how do we bring institutional adoption to crypto rails, and therefore the DTCC's decision to actually tokenize their assets after the no action relief they got from the SEC is massive for the industry. I think we're going to see not just US treasuries, we're going to see equities, we're going to see munis, corporate bonds, all move on crypto rails, which again is a great sign for the industry from an adoption point of view.
And how imminent is this?
So the DTCC already did some of the first trades over the end of last year. The goal is really to bring this into production this side of half of the year. And I think we're going to see DTCC eligible securities move on crypto rails this year at scale.
Tokenization is on the mind of so many on Wall Street. Are you having conversations with others on how they'll advance initiatives to tokenize equities or other investments?
So we are talking to multiple participants beyond just the DTCC. I think everybody's very excited about equities on crypto rails because not only that there's the opportunity to trade 24/7, I think the opportunity to borrow, lend equities in a more streamlined manner is a massive unlock, not just for institutional players, but including retail. So, I think everybody's really excited about the idea of U.S. equities moving natively on-chain.
Yeah, people have been excited about this for years. So what's the actual regulation that's going to need to change for that to take effect? Is it the crypto market infrastructure bill being passed into law? Because I've heard from other leaders like Vlad Tenev over at Robinhood, all it would take is a rules change at the SEC.
Yeah, I think that rule changes could accelerate that even faster, but I think the no action relief by the SEC does actually greenlight tokenizing the top 1,000 U.S. equities right now. So that's already available. I think that what you're hearing specifically is that people would want U.S. equities to become bearer instruments, which is a law change. Right now, U.S. equities cannot move as a bearer instrument and therefore be traded and moved permissionlessly, which is what the industry is looking for, which is a rule change.
One of the benefits people tout about tokenization is the idea of instant settlement anytime. How fast do you see those advancements taking hold on Wall Street? And do you foresee 24/7 markets happening broadly? The NASDAQ is already looking to expand to 24/5 this year.
Yeah, I think we're seeing it already now. I mean, I think that there's a lot of equities that you could trade 24/7 today, whether it's on Robinhood or other platforms. I think that the more people advance these technologies, we would see much more liquidity move into 24/7, which is currently not the case. So, our view is that the ability to move collateral 24/7 will just deepen the liquidity over the weekend and after hours, which is really why we started with U.S. Treasuries to begin with.
Okay, that's all for Crypto World today, but we will be back again tomorrow, and we'll see you then.